Quantum Cosmos presents Certified Financial Guardian, a seal of ethical selling. Privileged to bring you Atul Kumar, the fund manager for Quantum Long-Term Equity Fund and Quantum Tax Saving Fund. Atul is also the primary analyst for financials at the Quantum AMC. Atul has an experience of over a decade in the Indian capital markets and as an analyst and as a portfolio manager. He is a certified financial analyst and also holds a postgraduate diploma in business management from ICFAI Business School. What differentiates Atul is his strong conviction he has in stock picking and his simple investment style that he follows in managing Quantum Long-Term Equity Value Fund. He also has been a part of Quantum's multiple Path to Profits events held in various cities and where he interacts with investors and guides them to invest in his funds. Atul, thanks for joining.
Thanks for the introduction.
We will discuss over here if value investing will really play out in 2019 and the challenges ahead. So, you are a firm believer in value investing, which needs a lot of focus. Now, value investing has got its bouts of underperformance but pays off in the long run. What are the key points of your investment philosophy and what principles are the most important to your success?
Okay. So, we are long-term bottom-up investors following a disciplined approach. So, when we say that bottom-up investors, we are not so much guided by the macro factors, but we look at how companies are operating, at what valuations they are trading, and sometimes the macro factors could benefit us. So, for example, at times the macro may look not so good and people may be selling out of stocks. At that point of time, we could find opportunities, the valuations may appear right, and we would go ahead and buy those stocks. So, we are also disciplined in the sense that we would buy stocks only when they come to the valuations at which we are comfortable. We will wait till that particular point of time. Similarly, at the time of selling also we are quite disciplined. Once the stock crosses our internally set limit, then we do not double guess the process that we follow. Also, for us, cash is something that we are using for hedging purposes. So, if there is a value in the market, we would be fully invested. If there is less value in the market and our stocks are hitting our sell limits, then we would go ahead and raise cash. So, that is something which we have done many a times. And also we would buy stocks where we are comfortable with the management, we are sure about the corporate governance ethics. We would not buy until unless that's the case. For example, since the time the fund has been running, we have not invested in any of the real estate stocks because we were not very comfortable with the transparency levels or accounting, managements, etc. And one last thing is that we would be only invest in stocks which are quite liquid. So the NAVs are right, or I mean, if the stocks are not very liquid, then you could probably not be able to sell. The selling price could be much lower. So that's another thing which is followed by us.
Okay, so how do you think value investing will play out in 2019? What are the hurdles? What are the challenges, what are the opportunities, and how do you plan to tackle these?
Okay. So, when we are looking at the markets at this point of time, we see the valuations to be quite reasonable. If one looks at the BSE Sensex level valuation, probably it's about 23 times PE, which was much higher sometime maybe before September. It was much higher. Even within that, there are few stocks which have done well, and there are a lot of stocks which have corrected a lot in terms of overall valuations. Also, if one looks in terms of the expectations, so last year the market was up in the range of about 7%. Probably the year before that it was much more challenging when it was up by about 29%. So we believe that right now we are set at a good reasonable level of markets, and the opportunity to generate returns at this point of time is good. When we are looking at our own portfolio upsides, we are finding the portfolio upsides to be much better as compared to where things were maybe about 4-5 months back from those kind of levels. We have also brought down our cash levels quite significantly. Our cash levels maybe 4-5 months back would have been about 20% kind of levels. Probably right now they stand at much closer to about 5%.
So you're fully
levels.
invested in a sense.
Yes, in a way we are fully invested.
Okay.
Correct.
So you don't see any challenges, any particular challenges you would like to pinpoint, like these are the macro issues we need to tackle
Correct.
in
So
2019, because it's not going to be an easy year. 2019, it's going to be high drama, high volatility, election year as well.
Correct, yeah. So, I mean, primarily from elections, so what we have seen is that elections from a long term, they do not matter so much. I mean, maybe if one looks at earlier elections and maybe how markets performed, probably way back in the elections in 2004 or 2009, the markets were pricing that after the new government was elected, or in the case of 2004 or in 2009, just before there was a lot of election uncertainty, but at the end of the day, people made a lot of money. The point is that irrespective of the government which is there, India's GDP on an average that has done quite well. It has grown in the range of about 6.5%, and we see no reason why the same should not happen in future as well. So we are not so much worried on that side. Maybe in near terms, in terms of the policies of the central governments, what happens with the rate tightening, etc. in the developed markets, that is surely something which one has to be bothered about, because those rates set the asset prices to a large extent. And over the longer point of time, over the longer horizon, I mean, how the employment generation happens in India, that really is a concern to us. I mean, that is something which we would be watchful of, because there are about 10 to 12 million people who are going to enter the workforce every year, and unless you have you can create jobs for them. If they are not, the jobs are not created, in that case there will be a lot of social issues which can happen.
Okay. Piyush Goyal said that enough employment is generated. He stressed that enough in his budget as well. How do you read the budget 2019? Because it's an important document. Although it's an interim budget, it's an important document. I somehow found it very populist, very middle class centric and pro-farmer. But how do you read the budget, and what are the opportunities which you find as a value investor?
So from a budget perspective, as you said that it's an interim budget, I mean, depending on the government coming, a lot of things could change. From a, let us say, a deficit point of view, the government finances, obviously probably some of the measures they are taking, one has to be watchful how the government borrowings go, how the deficit etc. go, what kind of an impact that has. So those are some of the things. The positives of that are also that in an economy where there is a lot of distress on the farm economy, from that perspective, I mean, some of those things can clear some of the inequalities, and some of the social issues can be solved. So one has to also look from the other side of it, that there are problems, the farm sector is under distress, and probably hopefully maybe some of that could solve some of those issues. I mean, one has to look at how it is going to be fundamentally, let us say, the benefits have to finally reach the last person. But overall, I mean, we would not read too much into it. It's much more a kind of a budget which has an eye on the elections, and I mean, a government change or something that can have a impact on that.
So you're careful in a way while staying invested as well. 5% you're holding in cash, but you're careful about all these factors, in other words.
Yes, we would be considering a lot of factors when we are doing our own research. So a lot of things we would be looking into.
Okay. In the recent past, there have been many corporate governance issues. You of course touched upon them, but specifically ICICI Bank, Axis Bank, even PC Jewelers, Fortis, etc. As an investor, as a stock picker, how do you see these challenges, and what do you really look into so that these stocks don't fall in the portfolio? So what are the filterization process which you follow as a value investor in this case?
Probably some of these names we would have a holding as well of the names that you mentioned, but I mean the ones who are top on the order, not the lower ones per se. When we are doing our work, so we look at from a long history of how the managements have behaved in case there is an issue where they have been specifically the minorities they have not treated well, or yeah, correct, yeah, they have not been treated well. So in many of those cases we make sure that we are not buying into those particular stocks. There have been times where we would have invested in stocks, I mean a few of them, obviously, because you do not know a corporate governance even till the time that it happens, it hits you. So in some of those cases we have sold out of a number of stocks. In many cases what we have also done is that we have written to the managements, to the board, and some of those things they have been addressed by those particular companies, in the sense that I mean some.
So they were cooperative, they were giving you the right information transparently.
Yes, I mean again it's a company to company thing. Some companies can be more professional, so you can engage with them. In some others the response may not come. In that case we would rather go ahead and vote by selling out of our shares. But that apart, we would be participating in terms of voting for or against those companies whenever there have been times or we have not liked any particular event. We would be watchful by analyzing those companies. Are there a lot of related party transactions? Are the cash flows, etc., looking out to be proper in relation to the profitability that those companies are? So we try to look at a number of things and also act by writing to those particular companies.
Thanks for sharing your thoughts on corporate governance. What really differentiates Quantum Long-Term Equity Value Fund with the other value funds, the other peer categories?
So I am not really aware of what others are doing, but I could maybe tell you some of the characteristics which we are following, which is there in relation to quantum. So one is that there is a proprietary research team. We do not rely so much on the external research. We have a big team which is divided sector wise. So we look at companies. There is a quite meaningful and deep analysis of all those companies before they become a part of the overall portfolio. We also have a relatively long-term approach towards investing. So in the sense that when we are buying stocks, we are buying them for at a 2 to 3 year kind of a perspective. Our average turnover would be in the range of about 25% kind of levels, let us say 20 to 25%, which means that average stocks which we are holding are for about 4 to 5 years. So in many other cases, probably the time given, or there can be sales pressure to the investment team, to the fund management team, because if your stocks are not doing well for maybe 1 month, 2 months, then you may be forced to churn the portfolio. We are relatively more patient, so we are not so much bothered with what happens in a 1 to 3 months.
Typical value style.
Correct, yeah. So we would give ourselves more time, even though we are constantly rechecking our assumptions so that we are not going wrong. But then again, our time horizons are different. We are not looking to make money just in 1 month or 2 months or 3 months. That also throws a lot of opportunity, because if more people, there are more hedge funds, there are more long short people who are chasing stocks which have a growth in the next 1 month, 3 months. So there could be you could find stocks which probably near term they are not so good, but the long term prospects are good, and probably they are available at a good valuation. Another part is it's a very, very process oriented kind of an approach. There is a database, companies are picked out of that. There is a buy and sell limit for every particular stock. So which means that there is, let us say, you are not double guessing the process. If a stock comes to your
It's
buy
all
limit,
process driven.
exactly, yeah, it's a lot process driven.
So any mistakes you've made in the past, although you are process driven, but any mistakes you've done, and how do you handle these mistakes more differently now?
Correct. So the mistakes we would have made is that, we would have made a couple of mistakes since the time I have been involved with the fund. There would have been, let us say, some of the stocks in maybe textile sector, some of them in a mid-cap IT stock, another stock on the side of NBFC. So those were few of the stocks which we would have got into. What we saw that a large part of the problem in few of the stocks was they were relatively leveraged a lot, and that is one thing we learned probably, that you have to be very, very careful in when you are investing, that the companies should not be very, very leveraged. But then there can be specific problems related to specific sectors, there could be very, very different reason for at different points of time for this thing. But then we try to incorporate and make sure that we are not making the same mistake again.
Your best time and the worst time you've experienced as a value investor in the market now, and the key learnings from those.
So the worst times were when the markets were going up very, very, there was a lot of liquidity and markets were just flying, maybe rising daily 2-3%. We have seen some of those scenarios. For example, in 2006, 2007 was one period when the markets were going up a lot, and being disciplined, we were forced to sell out of stocks. We were sitting in cash, which hardly yields anything, and then the markets are going up. Maybe similar scenario was there in 2014 after the new government had come. There were a lot of expectations. People were expecting that with new government the earnings are going to go very, very fast. Based on those expectations, the markets were running up. When we did our numbers, when we were meeting managements, we were seeing that none of that happening. Companies were not willing to invest in any fresh capacities. Demand was an issue, and then we were sitting into cash. So those were the times when we had a lot of challenges, because you are underperforming, and that's a painful time. But then we have lived through many of such cycles. Good periods have been a lot whenever we feel that the markets are not doing so well, and there is a lot of upside to the markets. Then obviously we are happy to jump in, because if valuations are on the lower side, there is a potential to make a lot of money.
So you've spoken enough about value investing, and I'm sure viewers would like to know who's your all-time favorite value investor, and what are the key takeaways or the teachings which you try to pick up from his value investing style.
Correct. So, there are a couple of people who I have worked with and who I would have read about. So, a favorite one for most of the people from a value investing who has given a lot of money is Mr. Warren Buffett is one person. Then also I would say Seth Klarman is one person from a global perspective. These people have been very focused. They have followed their discipline, and they have done what they have done. From an Indian perspective, two people I have worked, one is Mr. K.R. Choksi. I had a pleasure of working with him. So that was one person, even despite an age, I found inquisitiveness of knowledge. So that was one person I would have admired in India. I would also say that our founder of Quantum, Mr. Ajit Dayal, he has done a lot specifically for the retail investors on the mutual funds. So probably those are the people.
My final question, you read a lot. Which are the 3 books you would recommend to our audience, which are advisors as well as investors?
Sure. So just a confession that my reading has gone down as compared to what I used to do earlier. Some of the good books I have read is The Making of an American Capitalist. That's a book on Warren Buffett. The second one is Common Stock, Uncommon Profits. That is another book which I enjoyed reading, and as a, let us say, analyst portfolio manager, that I benefited from that. I also like to read a lot of books on the financial history, because the next probably crash, or let us say the downturn, could be around the corner. So some books such as The Great Crash, Devil Take the Hindmost, those are some of the books which I have read.
In fact, Paul Krugman said that we may be heading for a global recession. Do you think that will happen?
I hear all those news, but I'm not so much clued about what's happening on the global economy. But if you ask the Indian economy, I think that is surely going to do pretty well for a long period of time, irrespective of what happens across the globe. We as an economy, India is a lot insulated from the global problems. We are much more a consumer-led economy.
All right, thanks Atul for your valuable insights, and I'm sure the IFA fraternity as well as the investors will immensely benefit from your valuable insights.
Yeah, it was a pleasure.
Mutual fund investments are subject to market risk. Read all scheme related documents carefully.